The recent ups and downs on Wall Street have some folks pretty skittish about the stock market. Friday stocks closed slightly higher, extending their winning streak to 6 days in a row and posting strong weekly gains. This, of course, after the Dow plunged almost 1,600 points 2 weeks ago for the worst point decline in history. Here to help us understand one potential cause of the recent market volatility is Brent Wilsey of Wilsey Asset Management. Good morning, Brent.
Good morning, Jason.
Okay, so we are talking about exchange-traded funds.
Yes.
ETFs.
ETFs.
What is an ETF?
Well, you know, it's kind of funny when you say exchange-traded funds. Many people don't know what that is, but they just call them ETFs. And ETFs are very popular right now. It's a way for people to get a basket of kind of like a mutual fund. They kind of replace the mutual funds, but the difference being you can buy and sell these throughout the day. Unlike a mutual fund, you got to wait till the end of the day to get what the net asset value was of it.
So you can, any time of the day, you can buy or sell these ETFs?
You can buy or sell these, exactly, yeah. And they have exploded. Back in 2005, there was about 500 billion globally of these. We're now approaching $5 trillion because everybody's getting into these. And it's kind of funny, Jason, before coming on the air, I'm thinking, how can I make this subject that everybody thinks is simple, that's really complex, explain to them so they understand it?
Right. And that's the first thing I said when we sat down. I was like, okay, breaking this down. Now, there's two types of ETFs. There's physical and there's synthetic.
Yes.
What's the difference?
That's very important because a physical ETF is one where they actually do hold, say you're getting the S&P 500, they actually do hold all 500 stocks in that ETF. However, people don't realize that there's ETFs that are synthetic where they don't actually hold them. They'll have swap agreements, derivatives. We hear that word, we get scared, and you should be. They don't really hold the stocks in there. They'll hold swap agreements and so forth. And if the volatility comes back and stays, these can be a problem to where actually, and people don't realize this either. You have an ETF. You think you're fine, I can just go out and sell it. Well, there's market maker firms and so forth trying to keep these level. If we get extended volatility for long term and some of these ETFs cannot trade properly, you could end up with all the holdings in that portfolio. Now, maybe not too bad if it's stocks, but it could be high yield bonds, could be emerging markets, and all of a sudden that ETF said, sorry, we're not going to make a market this any longer. Here's your holdings.
So this is a much more volatile situation than a mutual fund. You wouldn't want to get out of a mutual fund and get into an ETF necessarily? This
is the benefit. Yeah, this is the benefit of a mutual fund. A mutual fund is managed for you. So you have a manager there that's taking care of things and so forth. He can handle the volatility. An ETF trades throughout the day. So people will overreact. And the problem is if we've had this short-term movement here. I think we'll see more volatility in 2018. ETFs, again, caused the flash crash. When was it? I forget the years it happened, but they caused 2 flash crashes because it's just like a lot of water trying to go through this small hole. And when it can't get through there, you cause volatility. And also with the ETFs, they actually will buy a lot of the bigger companies. So they have almost like an automatic buy right now. So it's kind of like with this, you've got this automatic fund coming in. Everything's great when things are going up, but oh my gosh, when things go down, watch out.
Yeah, exactly. Okay, a lot of people have questions about the market right now. You have seminars coming up?
Yes, we do. We got one coming up Thursday at 7 o'clock in Scripps Ranch. It is free. If they want to register, they go to our website, which you know the website now.
SmartInvesting2000.com.
Yeah, it's very easy. And I started that back in 2000. That's where the 2000 came from. Yeah,
that's good.
We are going to talk about the volatility. We talk about ETFs, and this is a time that you need to know what's going on because this is not over. 2018 is going to be a scary year at some times.
All right, Brent Wilsey, thanks as always.
You're welcome.
All right, 2 local nonprofits have come together.